So welcome all to our almost the final webinar or live webinar that we have for year 2021. We are almost on this 22nd of December, and we're going to talk about KLSE, what has happened for the year 2021, and as well as looking some of the sectors in there and what are the sectors that we should watch out for in 2022, which will give you a lot of insight on how you should plan your trades. And remember, this video will serve as a guide for you if you come back maybe in 2022, maybe a couple of months later, come back and watch this again and look at some of the highlight notes that I'll be talking tonight. So this will be more like a live FB guide for you going for 2022. And I do say that if you listen to some of, or at least take part of some of the information that we have in here, you will do much better for 2022. Of course, whatever we said here are for educational purposes in here, and we make no warranty that what are the information they're giving you will certainly give you a good results or not. So take note, these are more for educational purposes, and we will not take responsibility for any thing. But also don't forget to subscribe to our YouTube if you have not subscribed so in our YouTube channel in here, and for all our video, including the one that you've seen tonight, will be archived so you can actually follow it again. And of course, don't forget to download our SmartRobie, which give you exposure to the KLSE market, the US market, and the XGH market in here. Pretty much what those markets will do much better what we have seen so far in here. Don't forget to download. And for our live FB tonight, which is the date of 22nd of December, we're going to be looking at what's really happened in the KLSE for 2021 and what are the sectors you should watch out for in 2022. And we will also adjourn to the US market, talk about the rise or fall. Okay, the rise of a fall, or it will be a risk of a fall. Sorry, is that going to be a risk of a fall going forward? Have we seen the Omicron virus in here, or it's going to rise from here? So that's something we're going to be talking about in here. And let me know in your comment below, what do you think the market is going to be, right? And also I'm going to share with you a story of two markets in here, which is going to be more like a kind of easy example that you will understand going for the story of two markets in here. So without ado, I think you're all well seated in here, and just type in 2 if you're ready to go, and let's proceed on with our live FB tonight. All right. Now first, I'm going to be introducing a first character in our story, and his name is Cairo. That's right. Now Cairo is a young man, and he's setting up, pretty much out in the world looking for work and job, but among his peers, now he come out, he has a lot, he is also competing with the amount of peers looking for opportunity in life, just like many of you and me when we first started. So of course, in year 2021, when he first started off, and also going to year 2022, you would see that he is also being a fresh person now. He's running out of cash, okay? And there's also the COVID-19 issue, going out to work, coming back and in here. He also have to deal with the rising costs that we have seen so far, right? Do you know that the bread cost has gone up by 10%, which I'll talk about it, or not to mention petrol prices too has gone up. The cost of living has gone up, inflation. And also there's also dealing with declining foreign opportunities. Sorry, there are less jobs coming up from overseas, and whether he can find the jobs that he's skilled was suited for, right? That's also no. And another one, to deal with geopolitical situation in here. So those are the issue. And don't forget, on the back of him, there are also other very similar peers or competitors who are also looking opening. Now think of this person, Cairo, in here. So the question is, what are the odds that he will be successful in future dealing with this? What do you think? Type it in there. What is his odds? Just type in Cairo will have difficulty, or Cairo will be easy. What do you think in here, given the circumstances he has as a young man in here looking for opportunity? Now pencil in on the comment in here, and this is where we want to begin and tell you the story of two markets. Okay, what do you think? Okay, what will be his story in here? Now remember, he is also competing with the other 3% that you're looking for opportunity in there. Let me know what you think. Okay, type it in there. Now then we move to a second character. Our second character, his name is Joe, and he's a middle-aged person, and he has a little bit more experience compared to Cairo. All right, and again, he's also out there looking for opportunity. Now this is character number 2, so we call him Joe. First one we call him Cairo, and the same thing, he also have to deal with inflation, have to deal with rising costs. The cost of living is gone. He has COVID-19 issues. There's also geopolitical situation that he has in his but at the same time, compared to Cairo, right, Joe has more debts because he has lived longer, I suppose, compared to Cairo in here, and he got a lot more debt from borrowing. But one thing he has that Cairo don't is that he got a lot of assets that other people wanted. Some of those assets could be skills, could be knowledge, right? Now, what about his odds of being successful going to future? Now, compared to Cairo, what do you think? Compared to Joe or compared to Cairo, what do you think of these two persons? I think the answer is fairly obvious, right? The answer is going to be what? Type it in there. What do you think of this person? Because I want to stimulate your thinking in here. What do you think? Would Joe be more successful or Cairo be more successful going into the marketplace? Let me know. Type it in there. All right. I want to see it there. Okay. Now, given the situation that we have right now in here, one thing that Joe has and Cairo don't is that, unlike others, whenever I get into trouble, my grandpa will assist me and give me money for my liquidity. Now that is one big difference, and that difference is have access to the bank. All right, so that is the difference compared to Cairo. Now keep in mind this two person that we talk about, because we don't want to come back and revisiting them again. So who do you think is going to be more successful? Type it in there, those of you who have, right, and let me know what you think of it. So Cairo and Joe. Okay, now let's go on, move on to our next topic that we have in here. Now we have our first character here, Cairo, and then we have a second in here, Joe in here. Now out of the two, with the challenges and the opportunity that is given right in 2022, who is likely to do better in futures? Type it your answer out there. Okay, come on guys, I won't move until you type the answer in there. All right, let me know what you think of either Cairo or Joe. Who is likely to do better given the situation in here? And reason why. Can you type in the reason why too? All right, I'm waiting. Okay, good. So if the right answer is definitely, oh, you said Cairo will do better. Okay. And why Cairo? If you type in Cairo, tell me why Cairo will do better. If it's Joe, why Joe will do better? Right? Cairo is younger, definitely, right? Joe is more diversified. Joe, yes. The right answer is Joe, because Joe has grandpa. Joe has grandpa, okay? So Cairo got age and he's learning various steps. Now, which is quite true. There's actually no right or wrong answer. But the fact is, this is the two markets that we are talking about, right? More importantly, if you're going to surviving in the market, you need to have grandpa, right? Just like the central banks that you see here. This is the central banks that you see. When you have grandpa will always come back in. And that's going to be the story that I'm going to be telling you tonight. What has happened in 2021 and what is likely to happen in 2022. All right. So let's move forward on the timeline that we see in the KLCI. Now for our KLCI, the composite index, we started at 1633. Way back on the 4th of January 2021, which is somewhere around here. This is the 4th. Let me just switch back to a laser pointer. Okay, just so, and as well as once we got into the market tried to lift up in here. Then the kink, which actually consented to our MCO 3.0. You'll remember on 13th of January that our lockdown will start from January to August, almost a 6-month lockdown. Okay, a 6-month lockdown, which takes us into 31st of August, which is somewhere around here. Because, right, so that was a 6-month lockdown, and during that time we were not able to have very limited traveling. You know, we all know, remember that we have to work from home. What else can you remember about the experience that you have in the first half of this year, from January to August 31st? Pencil inside there in here. All right, so at that time many of us were locked down at home. We couldn't go out. We couldn't go more than 10 kilometers, and I could, you know, most of the time I could still be doing a lot of my breakfast show and live FB. Many of you would have been in there. And along the way, in 29th of January, Hartalega posted record earnings right at the bottom in here and gave warning about the declining ASP, which is the average selling price, and also competitors are coming into it. And then the market didn't go where so much. And then on 26th of April, Malaysia issued the 6R economic recovery. I think there's 6R to it. Now, no, it's not mentioned anymore, right? You know, this is more for political agenda. They talk about in here. And then at the same time, there were a talk about a stronger ringgit versus the US dollar at 4.1. Then going on to 21st of May, at this point, AirAsia post the largest loss that we have seen so far, because this was due to the shutdown of the COVID, and then the market continued to break lower. This was when the Server Dynamics fiasco came through, right, which is the 25th of June, that the KPMG quit as a Server Dynamic auditor, and it still drags on until today. And then on the 6th of August, this is the time where the market was really hitting the bottom at 1.4, breaking into 1.480, which is we are right now here. That was a time where we were talking about bottom fishing, okay? And there was the low in the August in here, and then the market quickly rebounded and hit 4.23. That makes our ringgit much cheaper. That's maybe one of the reasons why we rebound, but the market could not go high and comes back down until the 11th of October, where the announcement of the MCO been lifted. Now remember, we were supposed to come out on the 31st of August. We didn't come out. We were in September, and then only on the 11th of October, the market lifted up in here. The 31st of August, they were expecting maybe the MCO was going to be lifted, but it did not. Then the market came back down. So when the MCO was lifted, right, this was the part where the market rallied. That's what tells you here. Now, usually the market would know, just like 31st of August was here, right? It known that it will come out from MCO, the market rally first. Always, price move ahead of events. Remember that price move ahead of events, okay? So this is what happened in here, but as the market was trying to go up, the news of the Omicron started to, come in, and on the 24th of October, right, you could see at this time, Bursa technology sector hit new high. Right, there was a lot of profit taking in here. The Omicron virus was first reported on the 24th of November. You could see the market break lower in here, and then on the 15th of December, the market hit another low where there is the US Fed signal interest rate hike. Okay, that was an interest rate hike, and that's pretty much sum up what has happened for 2021. There wasn't really big event that really pulls the market down. It's just that there was some underlying economic structure that pulled the KLCI down. We're going to be examining more about this going forward in here. Also, if you look back in the KLCI, it's really a wealth destruction. Now, this is from our VSA Trade 60 in here. If you were just purely buying and holding for that method, it would actually cause you to lose money. So you can see from here onwards, the KLCI this year right now is about minus 8% return. Minus 8% return. And overall, if you look back at the last 6 years, it's actually losing almost minus 7% in here. So take note of it. Buy and hold, that one's going to hurt you, okay? So we also want to look at how we compete with our neighbors in here. Now, from here onwards, you can definitely see, this is the KLCI sector performances. KLCI, of course, our top 3 best performance were technology, all right, with a 40.6% return. Then we have our industrial product, about a 12.7% return, and a finance, a 1.43% return. And the best performing were also due to because of the COVID-19 and continuation of our COVID into year 2022. With Omicron. Then we have the work from home policies, and also many of the digital business model like the e-commerce, the Zoom, right, the e-payment, many things we have to do digitally. So those business model who were able to adapt the fastest were the one who were doing much better, and that's why technology do so. Now, if you look at the top 3 worst performer, was definitely healthcare with a minus 40.6% return. So that's why a lot of you, I can understand your anger. You are still holding on to your healthcare and just looking for another opportunity to actually exit in here, right? And you may not see a light at the end of the tunnel for year 2022, maybe 2023, but let's not hope you want to drag your pain or suffering if you're still holding on to your rubber gloves. So, but I'm sure many of you who have been listening and hearing me would have got out at least some of your rubber glove. If not, at least do something about it. No, don't really have a portfolio that continue to bleed money year in and year out. That is something very, very not very positive, and I do hope that you will do the necessary steps to prevent it from happening in year 2022. We want to start off with year 2022, a very positive year, and that's why we want to talk about the two characters in the story that we talk about, where first was Cairo, and then we talk about Joe in here. Now going forward, oil and gas also has a very negative return of -21, and that's, to my opinion, is due to the green energy perception and the renewable energy coming in there. As much as possible, people are starting to dump their oil and gas, and it has become a very value stocks and continue to pay very, very good dividend. And then the third worst performing sector in the KLSE is the construction. Now the construction is a -16% in here, and this is also due to our country where we are lack of infrastructure fund. That's why you notice our governments are continuing looking for funds, as they have shelled out hundreds of billion on the COVID-19 bantuan, as well as budget to buy vaccine and to give assistance to the deaf too. And also right now we have the big flood that we have in Selangor, okay, and the big flood that we have, which is less prepared compared to Kelantan and Terengganu, and they are not getting the fair share that they should for assistance from the government. So, and that is basically due to the lack of the infrastructure funds that we've seen so far in here. So if you look back on the technology, right, which have a return of 40.6% over a period of 6 years, continue to do very well, with the exception of 2018. That's where the market actually pulled back a bit. In 2018, the market fell almost a -30%, and 2016 a -13%. But 2017 was a much better year. You could see 2020, of course, was a good year. That was a year of the COVID. And so far for technology, it's about 33% return, adding the month-to-month return in here. Now, second is our list is the industrial product, is the 12.7% return. All right, so you can see here the total returns up to now is about 9.8% return in here. So what you have seen so far, industrial product fare better in 2020 is partly due to the work from home policies. Some of these are because many of our industrial products are doing export based. Okay, like example KGB and the others one like press metal. So these are, a lot of them are export based and have done very well because they are exporting overseas product, right? Whereas the food and finance, they are just so only. We're going to be looking at some of the worst performer in here, and the finance just managed to crawl back in the last months in here, and this was assisted by the 3 interest rate hike that we talk about. That's why we notice for the month of December they started to come back in, but last year 2020 the finance did pretty well in November and December, right? And that also give you a yearly average return of about 2.5%. Now let's take a look at the worst performer index. Would definitely be healthcare. Okay, so year 2020 they had a very good year, 135%. We all know that was the best year because of the COVID-19, and they were in strong hands as there were very few rubber glove maker. But as since then, the last 6 months, we have seen a lot of competitor coming into the rubber glove as such. That's why we see a big drop in the healthcare stocks, a -40% in here, with a month-to-month average return about 46.65. Next in the list was the oil and gas, the energy sector, which also go through the same thing. In 2020, when Joe Biden won, you could see sometime in the month of October and December, you could see 2021, you could see the declining of the energy stock. But lately we have seen the stock the crude oil prices continue to move up, but we don't see that movement in our energy sectors in here. Definitely something has really felt out from the economic overall structure that we've seen so far. My best take is that the foreign funds are not coming up to take up a lot of these oil and gas, which traditionally are big cap stocks. And then last on is the construction in here. You could see out from there was a minus 60%. I think that was a year we have a minor recession in the construction in here. 2020 was also down, 2021 is also down, and this is also always due to infrastructures, right? It relies dependently heavy on the infrastructure. 2019 was a much better year. The infrastructures were there and fundings were available, and they were able to do much better in here. Now let's look at the ASEAN compared to the KLSE. Okay. Now if you look back from here, you will also notice out in our 2021, now compared to the other competitors, you can see here is the other competitors on top, right? We have the Indonesia Index 30, which is much better performance than the KLCI. Our KLCI year on for the 1 year return is about minus 9%. Okay, and the index was minus 4.8. Philippine Stock Exchange, which is the green one here, is minus 1.4. And then you have the Singapore SDI was a positive 8. The Thailand stock did much better, 16% return, but the greatest winner was Vietnam Index, which is up 36%. So in 2021, we were the worst performer, right? Because we have this group of competitors, really, doing a much better job than us. And I'm going to believe to it because, like it or not, at the end of the day, we, just like Cairo, right? We are competing, right? We are competing with our neighbors. We are competing with our neighbors. So from here onwards, you can see even in the 5-year, right, KLCI was also the worst performer, 2017, 2021. So how are you going to beat your neighbors? That's the question. Now, if you look from a perspective, now I'm going to slowly lead to where we are going for. Even going forward for 2024, mathematically, this was from tradingeconomics.com. The 5-year forecast continue to paint a very gloomy picture, which is a continued downtrend from here. The regressional model, right, are pointing to more downwards in here. So where are we leading for? Now, if you are Cairo and if you are Joe, right, where would you put your opportunity? So far, let's look at Joe right now, right? We have seen Cairo just now. We have talk about Cairo competing with its competitors in here. The competitors are like the Indonesia, the Thailand, the Vietnam in here. Let's look at Joe. Let's look at the Joe known issue so far. Now, of course, for the Joe known issue so far is we know that inflation arises, okay? And there was going to be a rise of interest rate. That's why we have on the 15th of December, the news that we talk about where the US FOMC, Jerome Powell came out. Then we have the Omicron continue to rise. And we will also know that the variant COVID-19 will it lead to lockdown. But so far we have said from the Anthony Fauci, even in UK, there won't be any lockdown so anymore. But the third challenges that we see in year 2020 is whether US Fed is not coming to every US market collapse rescue. Now that means whenever the market go through some sort of a big correction or a big sell-off, will the US Fed come in and do bond buying or buying less bonds or doing quantitative easing? So these are the challenges which we should know in 2022. So if you know of these 3 issues in here, then you will know this market is likely to go higher or going to fall lower. Let's take a look at it further now. Now let's talk about some relationship in here. Now this is the interest rate way back to 1992. Now the red line that you see here, right, this is the Dow Jones. Now Dow Jones has continued to go higher and higher. Now the blue line is the US interest rate Fed. So why we are doing this? Because we want to understand the relationship between the US Dow Jones and inflation. Now take a look, the purple line is the inflation. This is the purple line. So for the first time, this since compared to 2008, the inflation has gone up to about 6%. This is hitting about 6.5%. So when it hit 6.5%, interest rate was still kept very low because 2008 they felt that we all know what happened in 2008, right? There was a global financial crisis. So global financial crisis, they know the inflation is going to be coming down, and they immediately drop the rates. So once the rate drops, inflation also drops. So this is always, what they are trying to say, they use the interest rate to control the inflation. So they drop, see here, they drop first, right? The interest rate, then inflation came down. So the same thing now. Now inflation now is very high. So what they're going to do is they're going to raise this, right? They're going to raise this interest rate, right? They raise the interest rate, then inflation. You can see they raise the interest rate here, then inflation, then you can see the inflation drop. So here is also raise the interest rate, inflation drop. Okay, raise the interest rate, inflation drop only later, only almost at the second half of the year. So what they're trying to do now is that by hoping, again, they move out the interest rate, they are hoping this the inflation will drop back down. And that's purely why they are raising the interest rate in 2002 and 2003. We're going to talk about that. So now the next thing, what's really happened, now if you look back, what really happens is not so much of the interest rate, but in my opinion, is the manufacturing index that actually causes the US Dow Jones to go higher. Now, a lot of time, many of us turn our attention to the interest rate and inflation. We were really blinded by what actually is the main reason why Dow Jones got. If you look very closely in here, it's always important to have the manufacturing index continue to stay above the 52 and 56. Every time when the market drop below the 50, you can see here, right? This is the 50 mark. When you have the yellow one is the US manufacturing PMI. Whenever you drop below 50, that's where you see Dow Jones seems to be falling a lot more, right? Because manufacturing is a create of jobs. It's a sign of economic activity. It's a sign of growth. So when you have the manufacturing numbers drop, that is a big concern. So right now we can see the manufacturing are staying above the 60%. And all this, you can get it from the trading view, right? Because they have the economic segment in here. So PMI is likely to determine the US Dow Jones trend. So point number one, all right, keep in mind. Now point number two. Now, point number two is also when they start to raise interest rate, okay, when they start to raise interest rate, this is because they are tapering bond buying. But really, if you look back, what really happened was every time when the US economy, or in this case, the stock market got into a trouble, what has happened is the purple line. It's the blue line here, a blue or purple line. The US actually takes up a lot of debt, which means they are doing quantitative easing, what we call it, and they are also right now doing the bond buying. So you can see that's why the balance sheet of the US Feds are continuing to go higher, which means actually a lot of the liquidity that you see in the stock market comes from the US Feds. So which means, just like what we talk about Joe, whenever Joe get into trouble, he can always call his grandpa, which is the US FOMC, and they will start printing money, or they're doing bond buying. They was going to put down it. So the question is, we believe, or I believe here, 2022, the stock market will continue to go higher as long as you have the US Federal Reserve continue to support the market. Yes, they are doing tapering right now. They are buying less, but that does not mean it is giving up. They have never give up. Now let's take a look at the next chart that we have in. Now, if you're going back to early 2008 and 2012, Ben Bernanke, okay, introducing quantitative easing in here. So the quantitative easing right now, you can see, right, every time when they got into trouble, like on the 2008, they announced the QE, and then the QE expanded, the market rises. And then when they stop the QE, the market goes down. They announce another QE2, the market goes higher. So every time, and when the QE2 ended, the market goes back down. Then they did another operational twist. So what I'm saying, that there's always a grandpa. In Chinese, they say this one is grandfather's money. Whenever got grandfather money, no problem. They will come in and support. So this is what actually happening. If you look very deeply, right, over the last, and I'm going to show you the next chart. So whenever the stock market gets into trouble, the US Fed will announce QE, adding liquidity and flooding the stock market with cash. So whenever this is why going forward, right? Even in the after the Obama and Trump era in 2014, 2008, continue where we left off, right? You can see here, market trouble, Fed to the rescue. Okay, Fed to the rescue, Bernanke launch in here. So this was QE1, QE2, then they have another so-called like a QE2, OT, QE4, right? Quantitative easing. But in 2014, 2015, the economy was doing well, okay? This was an era where they have a lot of tax cut, and then global QE came in. The other England, Bank of England, ECB, BOJ, Bank of Japan, they did their time. And there was a Trump hope because Trump became the president in 2017, and the market continued to rises in here. So in between here, Fed also launches a lot of bond buying, repo, QE4, and then from then we have the COVID-19, the market fell. Okay, this is the S&P 500 in here, and you can see we have a QE quantitative. So right now what we are seeing is just an easing off of this so-called, because the market is doing much better. There's inflation in here. They want to calm down the inflation. They want to take off some of the interest, want to rise that interest rate. And this is what the market is doing in here. So again, very important. Whenever the stock market gets into trouble, like in 2008, and this time in COVID-19, US Fed another QE, adding liquidity and flooding the market with cash. And that's why the stock market continue to go higher and higher. So keep in mind, the grandfather is there. So the US Fed behaves like a politician, right? Not having a ruined year. Okay, let me just get this. So the US Fed is behaving like a politician, which means they don't have a ruined year or a recession under its watch. So the same thing is, so even this correction that you see, we don't think it's going to be correcting a lot more. All right. So what do you think? Have you seen so far? Do you think that the US market is going to correct? And if not, where would you be putting your money? All right, let's move on to the next slide I have here. Now, let's talk about interest rate rise in year 2022 and year 2023. We are likely to see 3 interest rate hike. Okay, now that's going to be in May 2022, September 2022, right? And this is the forecast, and then February 2023. So usually what we have is that once the interest rate is announced, the market will move up. But just before the interest rate is announced, the market will generally move down. If you look back in 1993 to 2020, that always been that trend. So once they announce interest rate move up, sudah jalan, because everything been priced in. So right now we are waiting. Is it going to be in May or is it going to be in March 2022? So this market will tend to be more like, moving a very listless, what we call no direction. But once the interest is start to announce, they start to jalan because they got some direction here. Because market do not like uncertainty. Keep that in mind. Market do not like uncertainty in here. So then the question leaves up to the point is that should you wait for fall and then buy or what? Now, like it or not, if you look back to US S&P 500, right, and you draw the exponential one, right, way back to 2007, the market is still going higher. If you're a long-term investor, right, you can use market timing tools like using the Pentagon or using some of the methods we teach in our market, in our masterclass in here to do market timing if you want to. But overall, the US market is continuing to wait longer. For those of you who are longer term, we have our master class portfolio. You can follow that. That is a long-term portfolio that should pretty much do well going forward in there. And remember, take a little bit of profit. Now also, is there a buying dip opportunity in 2022? Now this is a very interesting chart. If you look back, the usual S&P 500 has gone down without 5 months, was 10 months. In 2008, we did not have any 5% correction, but recently we did have a 5% correction. The last time was about 35% correction in here for the S&P. That was the COVID-19. So what a meaning is saying is that every time when the market correct to less than 5%, it does tells you that this is a buying opportunity. So use the tools that that is available to you, like buying using the Pentagon guide in there, or using the bottom fishing technique, or some of the masterclass trade to buy into this market in here. Buying on dips is definitely a good strategy in 2022 in here. So all in said, for year 2022, now coming back to here, is now we will talk about who they are. If you look very deeply, the KLCI is like Cairo. It has its own, he is young, no doubt, a very young stock exchange here, but he has his set of problems too. You have geopolitical situation, just like Joe has it too, right? But the difference between Cairo and Joe is Joe has grandpa. Right? He always have a grandpa. When he makes a mistakes in the stock market, he can always call grandpa, please give me some money, please give me quantitative easing. Have you seen way back, going back to 1993 to 2012, we have quantitative easing, QE1, QE2, QE3, QE4, and even right now QE infinity. Right? Whereas for Cairo, he's a young, no doubt he can learn. But what are the chances for he being success? Now you look back in year 2021 on top here, Cairo being the KLCI made about a -8%, whereas the Dow Jones and the US Nasdaq almost 18 or 19% return. So you decide. No doubt, of course, a younger man will have to struggle first, right? But the question is, where would you put your money? Definitely for me, I'll put my money with Joe because he has grandpa. So remember, when I talk about grandpa and Joe, this is what I mean. Right. Now, if you look back in the 5 years between KLCI, Nasdaq, and also Dow Jones, KLCI hasn't gone anywhere, just a -7%, and Dow Jones was plus 78%, and the index was up 180%. So with that, my case for my client and myself, I made a fair bit of money actually from the US side by putting my money into the US market in here. Over the last 10-15 years, I think I've doubled or even tripled that money, which make a very comfortable retirement, mini retirement for myself. And I do hope some of you who are listening are looking into this really strategy in here. Red Sun can still invest in the stock market. 2020, of course, you can still invest in the stock market. That is what it's all about in here. But you must have the right strategy. All right. Most of the time, we all don't have a strategy. And I do hope some of the key points I talk about in here, you can make money. You can double your money. You can even triple your money if you know what to do. Right? The question is, do you have a plan? So what we want to do going forward in January 12th and 13th for 2022, we are doing sharing a very good investing strategy, right? It's the US stock sector ETF. It's a step-by-step guide to profit on the 11th and 12th. So, and we want to teach you how to diversify for better return. It is for what I've done for myself and for my clients and some of our members in here is to build wealth, grow your retirement account, and protect your capital from falling market. Because on the US side, even if the market were to go down, we have our Pentagon guider that will tell us when to exit and when to turn short. We can buy the what we call the inverse ETF, so we will make money on a falling market. Now, some of the benefits in there, you will get our trade VSA indicator and signal, and you get the recording free, and we also be giving you our member support and training in here. So all this for an early bird price. So check out the our number below in there, and also call our number at the comment, and you'll get some information into it. And also for our VSA 360 dashboard portfolio, we will launch in February 2022 our US sector index screener, which will help you to look for green Pentagon index or avoid the red Pentagon index, so you are able to ride those trend that we've seen in. I think I've talked about this, and we will share this strategy on the 11th and 12th of 13th. Now, of course, some people will have doubt about whether there are taxation on money made from US. You will make money in the US. So the FSI taxable from 1st of January 2022 stated that any income, now remember it's income, it's not capital gain, right? The money that we made are income because we buy low and then we sell high, we made an income, we bring it back in, are not taxable. What are taxable in here is that if you're working in Singapore, or you own a property, or you have some sort of a dividend, right? Even unit trusts receive interest income, you are subjected it. But if it's capital gain, you are not subjected. Okay, so that reconfirm many of our members and many of you who wanted to invest in US have doubts whether you need to pay income tax or not. The question is, you don't have to pay for this one here, and that will definitely be good. Okay, now going forward for our 5-year forecast for 2024 remains to be very bleak. Okay, so with that in mind, I tell people you need to diversify out from the Malaysian market in here. That would definitely help in here. So towards my last portion of my talk is the sector that I believe, right, should do well, stay neutral, and avoid these three sectors. The three sectors will do well, in my opinion, will be energy, some value sectors in here, very small of them, finance, and e-payment and digital banks. This is because of the interest rate rise. These are the three sectors in here. Quite neutral because of the rise of the interest rate. It will be technology, the green energy, renewable, and property. Okay, three sectors to avoid will be healthcare. I do think that rubber glove, due to the continuing low prices or declining ASP or stabilizing ASP, upside are very little. Construction and travel related because the Omicron as well as the 2022, right, a lot of restrictions are going to be up. So we do not know this coming winter, which we'll see in January and February, right, how much of the Omicron virus will be affected in there too. Okay, so for summary, US Dow Jones, one of the biggest risks in 2022 is these four things. We talk about the inflation, we know the interest rate when it's going to be rise, we know the Omicron will be here, but good thing is the US both administration from the White House and also from the Euro are not locking down compared to Netherlands. So without the locking, you will see there will be a little bit of movement of the stock market. Not much, as I said before, because of the Omicron in here. And one of the big things we don't foresee is that the US Fed will not coming in rescue. Remember when Joe always got into trouble since going back to 1992, whenever he picks up the phone, right, Jerome Powell, the grandpa, will always come and give support to the market. All right. But last but not least is the unknown. That seems to be the most important one. Okay. So if you're aware of this risk factor, your portfolio will definitely do well in the US market. And remember what we teach in our master class also, right? So this coming 11 and 12, we will be continuing, right, our diversification in US, which is part and parcel of our educational program in here. So that one's going to be definitely good for that one. Okay, so that's completes my sector highlight for 2022. Those are the sectors in here, and take note where you want to put your money. Now remember Joe, remember Cairo, all right, Cairo. Okay, so where you want to put your money. All right, I think by understanding some of the implication in here and diversify, you will know 2022 how to allocate your money in here. Now, I'm going to be taking some question in here. I do not understand what Amel question is. My point is that you should try to avoid the Malaysian KLSE market and move to the US market. Even with the general election, that is still remember, think of Cairo. Okay, Cairo is going to be going through some geopolitical situation. Can he handle this geopolitical changes, considering he's a young man? Now, if you compare now to Joe, which have the backing of the financial institution in here, who will likely do well? Cairo, on the other hand, is a young man, very resilient. He will have his own challenges in there. The general election is like the geopolitical issue in here. Even if it's resolved, he still will find it very, very difficult to compete with his neighbors. The odds are stacked against the KLSE. Okay, I hope I answered your questions. Any more questions? Okay, if there's no more question here, take note of our next course will be on the US sector analysis in here. Right, this is the one that I want to talk about. Okay, our US sector analysis on the 12th and 13th of January. That's the one we're going to be teaching you how to diversify in your US account. Now take note, our US portfolio has done pretty well this year. and continuing to overcome some of the losses that we made in the KLSE. And for those of you who are in our masterclass, we definitely you are allowed to join back this US stock sector ETF absolutely free as part and parcel of our commitment in continuing your education to do well for year 2020. And for those of you who have not done so well in 2021, perhaps this is something you want to consider to invest your time to diversify out into the US stock sector ETF. All right. There is another question here. What about investment in China market? I think at this point, do avoid China market. Avoid China market at any cost. Do not touch China market at all, right? Because China market has a crazy man. I wouldn't say crazy man. I would say look at today what has happened. All right, if you look at the Chinese authority is even chasing after influencer blogger after they're done with the technology sector. So it has caused a lot of uncertainty. Now, if you want to invest in the market, it's important to know what kind of character is it. Is it like a Cairo? Is it like a Joe? Or is it like an angry old man? Okay. Vincent Tan, isn't that make it more healthy? In what context are you talking about, Vincent? Tan Buntek asked about value sector. Now, value sector would be very limited, to be frank with you. Right now, the only value, it's a finance and the energy. But energy, it's going to be very tricky because once the another new infrastructure bill that's coming out in US, you can see the green energy will take off. So that is seemed to be very tricky. For China market, instead US market later will bust, it will become worse. For the US market later, why would there be a bust? That is a question. That's what I presented the facts to you, right? You must see why there is a bust. This one, Diana, can we have the pages for the foreign income taxation so we have some guidance? Okay, yeah, this one we've given up the pages to you already. You can ask it in a Telegram group, okay? China controlling those big companies and make China market down. Yeah, that's how it wouldn't be healthy. Isn't it make it more healthy? I don't think so. Instead, for Vincent, it's important to understand at the end of the day, what are you investing at? Are you investing in capital gain or are you investing in company for very long term? Because this is what we call opportunity cost, right? Now, for example, Charlie Munger have bought Alibaba. He bought it about 300 plus, now it's 130. So this period while the market is going down, you got other stocks that is doing well. You have the cost of capital. So you want your market to perform, because always go back to Vincent. Of course, if you do not understand, we have a wealth building method. Okay, our wealth building method says that in certain years you need to have a required rate of return, because our goal is to build $1 million from your account. So for those of you who are very interested to build $1 million account, that's what they join our master class, and this is how we doing that, because you need to build that required rate of return. If you don't have that required rate of return, you cannot build it. And when you invest in the China market, because the market continue to be down, you miss that opportunity cost. There's a question here. Melvin asks, is it safe to invest in blue chip dividend stocks? I would think so, yes, but you will only be holding up inflation. You're not building wealth. You're just holding up the wealth in here. Now remember, going back to the question with Melvin, Cairo versus Joe. All right, who do you think will do well? I'm going to ask Melvin here. All right, Joe or Cairo, giving the circumstances in here, who will do well, right? If you think that Cairo will do better than Joe, then invest in Malaysia, right? Great questions in here. Always want to clear the perspective, especially those of you who are public. For our masterclass members and our members, I think I always say this in many of our private sessions in here. I continue to guide them, giving them a perspective, global macroeconomics, because this market, you're going to be with it for the next 10 to 15 years. And there is going to be great wealth to be made. And that's how I made my money over the last 5 to 10 years, riding on the stock market in here, not speculating. right? So it's important for you to understand some of the macroeconomics, not only understanding the technical analysis, the fundamental, but the macroeconomics. Think of me like the bus driver, and all of you are in the are my passenger. Of course, for our masterclass member, you get better treatment because you are the paying customers in here. And for some of you who are the public, you're always well to join us and come to our private individual session in here. Okay, so take note for our 12 and 13, do register for our 12 and 13 for our investing blueprint US stock sector ETF, and you can register 0102669761 and inquire more. We have early bird fees for signing up before 31st of December, and we're going to be talking a lot on the US side in here, right? US is Joe, Cairo is the KLSE. Think about that. Some of the story, I talk about the story of the two in here. Give it some thought and let me know what you think. All right, that's all I have for tonight. Thank you for coming. I hope the last 1 hour is well spent and you have learned something from my sharing in here, because this is also good for the rest of our members and also the public to know the perspective going forward, and also take time to go to our youtube.com/tradebsa and review back this video in the coming months and see whether what I said is true or not. And thank you for watching. So I'll see you in our coming talk. Bye bye.